Howdy ho traders. This is my weekend video. So basically some things that I'm seeing here in the markets. Basically I'm starting on the weekly time frame here. So we actually closed below our monthly close from because we closed last week right here. So we are negative on the month for S&Ps. We closed negative on the week on the S&Ps. We have a new lower low for the week, and we have a new lower high for the week for the S&Ps. This is a what you would typically call on a bigger time frame stair stepping down on the S&Ps. So be mindful of that today, what just happened today, and also up here at all-time highs now. Now we are actually confirming on this swing high, and we go into a different time frame real quick here. On this swing higher here, guys. So we've had 3 swing highs into this area. Okay. So, we tried to push out here, tried to push out here. Uh, this rejection right here could not get any push above. So, we are technically into a lower swinger high on the daily time frame as well. Okay. Heads up on that. So on the 4-hour, now we have to go down on our 4-hour charts here, guys. So we were one time framing to the upside here on the S&Ps. Okay, putting in a really good rally here. As of today, we have broken the one time framing, so the uptrend is invalidated here on the S&Ps to the upside going into next week. And we have to be quite mindful. The first week of February tends to be fairly bullish historically, which guess what? It closed negative compared to last week. But historically, the first week of February is fairly bullish to markets. And then starting the second week, going into the mid to late March, things tend to sell off. So seasonality wise, it's not looking good for the markets, and we're actually getting an early signal here on the S&Ps of some structural difficulties going into second week, which we shouldn't have been seeing at the very first week of February. So be very mindful of that going in your trading going forward here. Okay. Anything else I can say right here? So basically, if you're a bull, what we are trying to do going into next week, we want to build a higher low support to rocket up and potentially break out of the trend. So we're coming in Monday morning. If we're getting a gap up, that'd be great. What we're trying to do is this Friday low. We would really like that to be a higher low at the Friday low to build for a tighter range to ultimately propel us to the upside. Okay. Uh, the fact that we have a lower high right here now, it gives us the edge to the bearish side going into next week. Not just to mention the seasonality purposes, but the edge is now more to the bearish side going into next week. So, from a technical structural standpoint, so just be very mindful of that in your trading. Okay. Okay, guys, I'm starting on the weekly here for the NDX. We did manage to close just ever so slightly a few ticks above last week's close. So that means that we did manage to close slightly positive on the monthly, slightly positive on the weekly. Okay, heads up on that. It looked like they really took us back almost to completely neutral on the gamma exposure for the week. So, they just didn't have power to even hold any type of gamma directional bias going into the close here. So, pretty much the that suggests that that was the max pain for option buyers going into the close today. So be very mindful of that. Option sellers actually, that's what they strive for, zero gamma point close, because then technically, they their longer positions actually benefit the best, and that's pretty much what they managed to succeed in today's session. Okay. Let's see, go down to the daily real quick here. And we will zoom in here, guys. Okay. And so basically, what I got going on here, uh, we we were one time framing to the upside. That trend has broken, so we're officially have broken the one time framing upside. Similar to the S&Ps here, we are looking for a situation that gives us a lower high for the bulls, or a higher low for the bulls to propel to the upside. Okay, so and we have to be very mindful. Also, we're closing right near um, uh, the Friday's close. Okay, so we last Friday we had the and same thing with the S&Ps. Uh, Last Friday we had the announcement for the tariffs, and they were just dumping everything under the sun into the markets. Well, we managed to close right back there. So you have to keep that in context. Okay, and the fact the prior week that we had the uh, as it deep seek deep seek news came out. We rejected that deep seek high on the markets. Uh, so be very mindful of that. I forgot to mention that on the S&P. So we have rejected that deep seek high rejection. You know, and so that's acting as major resistance. You see how we rejected right there? We couldn't even getting interest above that deep six. So that really is giving us a big warning. The fact that we couldn't get up into this higher distribution, knowing that the deep seek sell off, we basically were able to come up, fill the gaps, but we couldn't hold prices above that sell off area. So be very mindful of that. Okay, and that deep stick happened over the weekend. So this candle isn't really relevant. It's that big gap from the deep stick. Well, no, maybe not. I can't remember. Can't remember when that deep stick news came out. I thought it came out Monday morning. Yeah, yeah. So this wasn't really playing. I think Monday morning is that what caused that breakdown because the news came out overnight. Pretty sure that's what happened. Similar situation on the 4 hour here. We broke our time frames, and into this really wide uh, oscillating zone here on the markets. So we have to be very mindful of that going forward here. Uh, and it's could be definitely be a big problem in the markets. So we have to be very mindful here uh, where we're at here. And almost back to zero gamma. Pretty much blew up all the option buyers on both sides of the equation. Okay, on the weekly second here, I'll cut that section out. Okay, what we're seeing here, the Russel on the weekly. I thought that sounded wrong here. So we are down on the month and down on the week on the Russell. Heads up on that. Not too bad here. The prior week close was 2287. This week's close was 2279. So, you're about 8 points lower on the close versus the prior week. Okay. We do have a lower low, but not a lower high. It's a double high, double top on the high. So we do have potential for stair stepping down here on the Russell. Okay. Go on the daily. I think I got the wrong study. Yeah. Thought I had this drawn out better than this. Let me go over the Qs real quick. Show you that one. Oh, not Qs, IWM on the daily. And zoom in here. So the Russell is not stair stepping higher. It's pretty much building out sideways day after day after day here. In theory, we're either uh, building a building a base to break out to new highs, or we're going to reject this. Not for sure which is going to happen yet. So be very mindful of that. One thing I did want to show you guys about the IWM, this when we got into this head area, the first time. This was violent gaps ups, gap downs, gap ups, gap downs. This is your textbook, what you would expect to see in a head and shoulders pattern, where uh, you got bipolar price action in the head of the pattern. So be very mindful of that. This pattern right here suggests that that more than anything that we have a potential head forming here for the IWM. I did want to point out also the internals were ugly, and look down here. The internals really accelerated into the close to the downside on the Russell. So heads up on that. Major sell side action here on the Russell into the close. Uh, we have a similar situation uh, on the Nasdaq or S&Ps. We closed off, so it didn't get above the moving average though, but we did have a nice little sell off. We closed at dead lows, cumulative ticks. A lot of bearish side action on the ticks today on the S&Ps. Where's that one? That one there. This here is acting was acting a little bit worse. Look a little bit better. The cumulative volume was actually bullish today here on the Nasdaq, so it was holding everything together coming for today's session. So that's why you can't throw in the towel on this market quite yet here, because there was cumulative positive volume still trying to find its way into the Nasdaq today. So I would have liked to seen the Russell and the Nasdaq both showing the negative, uh, that negative indication to be going swing short for the weekend. So be mindful of that. That's why we didn't want to load the boat to the short side, because the internals weren't totally confirming that hey, the traders were throwing in the towels. They were still trying to put a bid under the Nasdaq, under the hood. Other things I was looking at for next going forward here, uh, we found out Wednesday. I think it's Wednesday. There was a big trader spent $1.5 million on the 27 calls on VIX, going out to March. Okay, so they've spent a massive amount of money for the 27 calls going out to March. And today they held right where they need to hold on the VIX. It looks like some relative outperformance in the VIX for the foreseeable future. This may be one of the smartest long trades if you can get in the right point. With one thing at the VIX, you have to buy at the right point if you're going to succeed on it. And this morning, that was the right point. Okay, and so the volatility with everything going on with Trump and everything, this thing here is likely just to really maintain a sustained bid for some time now. So whether the markets go down or not, I don't not for sure, but I am pretty confident that volatility is going to remain high for some time now. So some things I was looking at in the markets, I was looking as a potential uh, right here, this prior high that I thought potentially they were going to defend this prior high. I posted a chart last night on this, and knowing that I would have known I was wrong pretty soon if that was not the case. So we're right into these prior highs. We gap down into that. Okay. And what I was looking for is, so we've already came down once, so it could have done it, completed it right there. That's why I was mentioning it yesterday, that we may have completed the down push and get some relative strength. But what we're seeing here on these relative strength indicators, this is versus S&P, this is versus the NDX, and as you can see, the Tesla, you know, uh, even today was showing much more underperformance relative to their their indice counterparts. So that suggests to me that there is nothing in this suggests that this downside is over with. In fact, they're probably more just as likely to be coming to the bottom of this, the 320s. than for it to hold. So be very mindful of that. Then again, I may have been one day ahead of myself, you know. So bottom line is, I could have been just one day ahead of myself, and Monday they take it right back up. But we know for a fact that Elon Musk's brother's been selling shares, and we know that Kathy Wood has been selling shares. So be quite cognizant of this trade setup. Okay. On the flip side of the price, guys, you see the relative strength on Meta. Meta just rocking versus the S and P's. But the warning that I have, if the S and P's start rolling over here, you see this divergence happening. So we have a MACD divergence happening. Meta's making new highs on a MACD divergence here on the 4 hour. So be very mindful of that. This can get brutalized. These are the ones whenever the market decides to break these divergences at all-time highs that's been showing relative strength. They're the ones that typically get hit the hardest. So if we do roll over here, you got to be mindful that Meta could be a problem child since we had this divergence happening up at these highs. So we just got to be quite mindful of that scenario. Okay. So we continued to have relative strength in Nvidia today, even though the markets were selling off. They held it up really good. We got into the 130, okay, today, and to my own fault, I could have made over 150% on this trade. Right near the open, I uh, uh, went short Nvidia at the right around the 130. Well, guess what? Uh, I gave it a 10-cent wide stop, and they took it up, and I literally got stopped out on the high tick of the day. So that's the way it goes. Literally on this little wick right here, I got I got I got stopped out at the on the very high tick of the day by having a 10-cent wide stop. That's what happens. So, and the relative strength. No, that I was working against the trend. I would have been much better to try to short Tesla than try to short this. So be very mindful. What's going on here. So we are showing relative strength. We start pushing above 130 next week. All the markets are going higher. Okay, but as of today, they were not able to do that. Okay, we have spent you know 2 days now above this resistance line. I don't know if we're going to come in tomorrow and lose that. Now, on the bigger time frames, I do want to point out this is a monthly downtrend. So, we are technically back above that monthly downtrend. So, it's not nearly as bad as it was looking before. Uh, you know, but so back over here, I was looking bearish. But now the trend is trying to stabilize itself. Okay. I'm going to leave it right there. So bottom line is I'm going into next week and very concerned that the seasonality is likely to start, uh, making this market reset. It does feel like the market is just on its last breath because it's just every time we get up to those highs, it's sell, it's sell, it's sell. And there wasn't really any news today for the selling. I mean, the, the traders had decided just right at the highs to sell into it, and I don't really think the news headlines had anything to do with that. I just don't think there was enough oomph there to push it through. So, and like I said, because you didn't have that higher low at that multiple top, there just wasn't no driving force to take us higher. We have to wind that up tighter to get some momentum to push these things out uh, going forward here. Okay, so thanks for listening, and like my video if you get a chance.